Intel, one of the biggest losers on the NDX in the pre-market, despite the company actually topping revenue estimates. Kristina Partsinevelos with a look at today's drop. So what is the story here, Kristina?
Sarah, all of Intel's revenue segments, they did beat estimates, but that beat came against already low expectations. You talked about that revenue beat. Analysts have been lowering their expectations for the past month or so. Margins were a little bit weaker, and guidance for EPS came in below consensus, driven by higher costs. Management also acknowledged a likely pull forward in demand ahead of tariffs, something we saw last quarter too, meaning they may have borrowed sales from future quarters. Rosenblatt called this a meh quarter with a slow turnaround underway, this turnaround that's been taking a long time. The tone on the call was clear. Intel is staying disciplined on costs. More layoffs are coming. Projects in Germany and Poland are getting scrapped. A plant in Costa Rica is being consolidated. The list continues. But is that enough? I spoke with CFO Dave Zisner yesterday, who told me this really frees up more CapEx to be reallocated to the United States, despite the fact that they're going to be slowing down construction at their Ohio plant. But the street still isn't convinced. Cantor Fitzgerald says there's still, quote, plenty of wood to chop, and the foundry strategy appears challenged. CEO Lip-Bu Tan said Intel will only spend on foundry if they book customers. Yet in their 10Q yesterday, Intel admits it's willing to pause or scrap its most advanced 14A process, raising real questions about their foundry commitment. Mizuho says Intel still lacks the AI traction and a clear shift to a foundry model. Baird doesn't see meaningful revenue drivers ahead. Both are neutral on the stock. There's a lot of sell side that are just staying neutral on the stock. But Deutsche Bank says Intel is heading in the right strategic direction, but the turnaround is going to take time until there's real progress. They expect the stock to stay range-bound for now. A lot of price targets are just between $20 and $23. The market clearly isn't willing to wait, and that's why you're seeing shares down about 8%, guys.
It's pretty remarkable, Kristina. This line I saw from the call, the last year of positive adjusted free cash flow they had, 2021, and they argue this is completely unacceptable. A lot of these problems have been brewing for a long time.
Yeah, I don't want to. Management is quick to say that it's, the problem of the previous CEO, that he spent so much on the foundry business over the last little while, so much on building all of these advanced processes within, 4 years, 5 nodes within 4 years. And so they're quick. Not quick. The company has no doubt spent a lot of money. But that's why Lip-Bu Tan is so diligent on cutting costs. He said that he wants to remove layers of management by 50%. The problem is this is going to take some time. So for investors, are you willing to sit it out for at least 2 to 3 years in this name, knowing that it's really going to stay within that $20 range and the lack of AI strategy? I think that's a big part too. Their most advanced process, 14A, could get killed in the next 2 years if they don't have any external customers.
Right. Definitely not a position of strength at the moment.